Hey, what's up guys? Sam here, and I'll be doing the free video for Tuesday, July 12th, 2022. So tomorrow is the CPI number. The market seems a little bit skittish. I don't know why. We just have generational inflation. But let me take you back here to this little trading range back here. Right, this was last month. Now, points to you if you can spot where the CPI number came out there. CPI actually came out right here. This was the day that CPI actually came out. But this was the day before CPI, where it certainly looked like somebody leaked the number, because on that day, the market started selling off. It broke below support. Then the next day it gaps down. After that it gapped down. And then it gapped down again, right? So from this little consolidation, you ended up getting a huge flush down after CPI. So keep in mind, this was the actual CPI day. This was the day that it was leaked. Today had that kind of same tenor to it, right? I was already seeing some stuff going around on Twitter saying that the CPI is going to come in at 10.2 tomorrow, which seems astronomical. I don't know if I believe that, but that is the rumor. And these 2 points in time right here, the last time that we had CPI and then going into this CPI, certainly has the same kind of tenor to it. I would just say that the trading range in this instance is maybe a little bit bigger, but it has the same kind of vibe to it, right? So the question is, well, what happens next? And really, I think there's really only two possibilities here. Maybe I lack imagination, but I only see two things that could happen here, and each one has a different probability attached to it. So the probability that we just drill just like this last time that we had CPI is, I'd probably say 75%. And the reason I say that is because you're starting to get rejections on the hourly 200. You got rejected there. You got rejected here. You close the market below the hourly 50, which is a critical level of support. And really, there's nothing under the market. You would say that, well, you have these lows down here at 73. Surely that's going to provide a buffer zone. And you might get a bounce off of that. But I think in the event that we have to go from 380 down to 373 again, I think that's going to fail. So I'm not actually looking at that as a reliable support. So then the real support becomes the lows, right? So that's the higher probability based on all of the signals here, because again, the similarities between here and here are somewhat striking. So I would say that's probably 75% probability. Just path of least resistance, broken support, all that stuff. The other 25% is that today primed the pump for a huge short squeeze tomorrow. Now again, I don't have any technical signals to hang my hat on this, right? You're below support, you took out the lows, your indicators are not good, right? None of this is good, but this is the last chance they have, right? Because if they are unable to create a short squeeze tomorrow off the CPI number, they're going to lose all of this progress, and they're going to have to come all the way back down to about 360 on SPY, right? So that'd be about 200 SPX points. That's a high stakes game. So that's what's in queue here on SPY. Now, the only other thing that I saw that was somewhat interesting here, because the bears have pretty much everything except HYG, which we've talked about here. I wouldn't give HYG necessarily to the bulls, but I would say it's leaning more bullish, which was not the case last month when the market broke down. That was, in fact, it was quite the opposite. HYG last month, before it broke down, because we actually got short the day before CPI came out, and the reason we got short in the room was because of HYG. Now, this time is different. This time, HYG did not lead the sell-off. This time, HYG actually closed higher. So that is a little bit of a glimmer of hope for the bulls. But pretty much the bears have everything else, with the majority of it being in the dollar. So I just kind of explained the setup there on SPY. Let's take a quick look at VIX futures. And then here's the two things that I'm going to be looking at tomorrow. SPY and VIX futures, or VIX, it doesn't matter what you use. And so it's important to understand these levels, and they're all very clustered together. So 27 here on VIX futures is actually the yearly VWAP. And you can see there it's kind of been in play multiple times. So at 27, the VIX is somewhat neutral. Think of it like the 50-yard line. Above 28, which would also put it above its hourly 200, then that puts the market bears in control. So above 28, the market bears are in control. At 27, it's 50-50. And below 26, if they're going to get that low probability short squeeze that we're talking about, it has to start with the VIX futures breaking 26. So 28 belongs to the bears, 26 belongs to the bulls, 27 is the 50-yard line. Aside from that, I'm going to be looking at SPY, and then understand that CPI comes out tomorrow, 1 hour before the market opens. You're going to have almost unquestionably a big move after that, up or down. This is the last chance, in my estimation, for the bulls to create any type of traction. So if they're going to create any type of upward movement for the rest of the month of July, in my estimation, it has to start tomorrow, and it has to start with the cold CPI number. So you guys have kind of the template for that. And really, the best way to play it is just kind of binary. So in the event that they start getting the short squeeze, I would focus on tech. In the event that the market fails, and keep in mind there's a much higher probability that the market will fail based on historical precedent and patterns, then short everything, right? So it becomes kind of simple. If the market decides to create the short squeeze, tech. If the market decides to sell off, which is the higher probability of the two, then short everything. All right, guys, that's my time. Next time I see you, we'll have the results of this, and we'll be able to determine the next big swing for the market. So hope this was helpful, and I'll see you next time. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.